Is whole life insurance too expensive? I'm sure you've probably heard this idea before, and maybe it even weighs on your mind. You are interested in whole life insurance for various reasons, but you feel that it's too expensive. What I'd love is if you could comment below and share exactly what specifically that means to you that whole life insurance is too expensive, or that you think maybe somebody else meant by that. I want to challenge you to think about life insurance a different way. Now, if you are looking at whole life insurance, there's certainly a cash value component, meaning you have the death benefit that will pay out to your heirs when you die, but you also have this cash value that grows inside the policy. Now, the cash value is like a savings or a storage tank, a place to store cash. It's actually one of the most powerful and profound savings tools that I call it savings on steroids. And the reason is that you have this opportunity to put dollars into cash value. By paying your premiums, you're putting your dollars into cash value. And that cash value is growing at a competitive rate of return. It is uninterrupted compound interest. You can borrow against it, so you have liquidity and the use of your money, and it's very safe. Now, when we look at that as a storage house to place cash, that's extremely valuable in your financial life. And yet we have this idea that it's expensive. Now, I would never look at a savings account as expensive. I put my dollars in and I'm able to use them. It's this storage place for money. It's not expensive because I put the dollars in, I can get the dollars out. Now, I also don't think of an investment as expensive. I put in $1, it turns into $1.30. That's not expensive, it's actually making me money. Now, when we look at life insurance, specifically whole life insurance, over a long period of time, it is not expensive because the cash value you can access and use is more than you put in. Now, there is a period of time in the beginning of the policy that we call the lack of liquidity years. These are the hardest, worst, lowest return years in the life of a life insurance policy, specifically if you're comparing the dollars you put in premium versus how much is available in cash value for you to use. So we call that the lack of liquidity. What's happening during that time frame of the policy? Well, the policy is paying for internal costs. Things like the cost to run the company, the cost of paying out death benefit, the cost of commissions. So certainly there are costs inside the policy, and sometimes those are the things that make us think of it as being expensive. But what happens is once you overcome that lack of liquidity, because most of those costs are front-loaded in the policy and you pay for them early, you have a policy that crosses over this threshold or this break-even point where you start having more cash value than you paid in premiums. And from that point forward, it's simply growth. Your money is just more and more and more than you put in every year. And I would say if I put $1 in and I have $1.30 or $2, there was no cost to me. So even though there's internal cost to the policy, you really need to think about the impact to you. Now, maybe you're thinking whole life insurance is expensive because if I get $100,000 of death benefit with a term policy, I'm going to pay less premium dollars than if I get $100,000 of death benefit in a whole life insurance policy. And absolutely, that is true. You will pay more for the same amount of death benefit in whole life insurance than you will in a term policy or even a universal or variable or some version of those type of policies. What's really important to understand is you are not comparing apples to apples. If we look at term versus whole, term life insurance gives you a death benefit only. If you outlive the term, which most people do, you will get no dollars back from that policy, meaning you paid in every single year, whether it was a 10-year policy you paid in for 10 years, a 20-year policy you paid in for 20 years, hopefully you'll outlive that term and you will have then no dollars to show for that term policy that you had in place. However, with whole life insurance, it's completely different. You know that you will get a death benefit whenever you pass away, and you're building cash value in the whole process up until receiving the death benefit. Now, if you do happen to live past age 121, the policy will endow, meaning your cash value and death benefit will be equal to each other. Your cash value will have risen to equal the death benefit, and that full amount will be paid out to you personally as you're living. Now, that's not at all the same thing as having a death benefit with a term policy that's in place just for a specified short length of time. In fact, with whole life, you're getting these tremendous living benefits, a place to store cash, growth on your money that you can use and borrow against, and a death benefit that's guaranteed to pay out. So saying whole life insurance is expensive is kind of a cop-out for really thinking clearly. Because if we can just label something, then we don't have to think about it. We don't have to investigate and really get down to what it actually means. And unfortunately, for so many people, this idea that whole life insurance is expensive has completely blinded them to understanding the tremendous value that whole life insurance can be in your financial life. So I really encourage you to move past that limiting idea that something is expensive and really find out what value it gives you. And it doesn't even make sense to call something expensive if you get more out than what you put in.